Alrighty. So what we're going to be focusing on in this session today is I've been getting so many people saying that they believe we're at the top of the market and they believe the market's going to crash and all that sort of stuff as well too. So one thing I want to share with you, and one thing I want to walk you through is what I see actually happening in the markets right now and what's actually going on right now. And what's happening through there. So I'm going to be walking you through some things to look out for on what's going on in the markets right now, and how to respond to that as well too. The thing you want to be looking at is, and what you want to be focusing on is, you want to be focusing on firstly, let me actually get straight into the typical disclaimer here, guys, and we'll get started here. So guys, do not place a trade based on what you see in this video today, because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the markets, and trading is a difficult thing. So be smart about the way that you are trading these markets, all right? Now, one thing I want to walk you through is the understandings of some simple things to look out for to know whether we are going to go into a crash, okay? And whether we are at the top of the market and all that sort of stuff. Now, before I do start, guys, if you guys are looking for more of a mindset training from my mentor, it's a 1 hour presentation, and it's around about creating a fearless trading psychology. Then in the right here, guys, in the chat box, this link right here in the chat box, if you I'm not sure why that. I'm not sure why that's doing that there for. It's not allowing me to post thing up there. Anyway, let's get straight into the markets right now. So one thing you want to be thinking about, guys, when you're looking at these markets and when you're trading these markets, is you want to be focusing on what's really happening in these markets right now and what's really going on with these markets right now, because you want to be focusing on the market itself and not what you think, hope, or fear. Okay. Now, remember, I want you to be focusing on, well, at the top of the market, is the stock market going to crash? You want to be focusing on, guys, that when you are trading the markets, okay, when you're trading the markets and you're getting involved with the markets, you want to remember, a crash in technical terms takes a 1 to 2 years to happen, right? A year and a half to happen overall. So that's what you want to be focusing on. You want to be focusing on that, right? You don't want to be focusing on anything else, but you want to be focused on that. Now, bear in mind, guys, when that happens, right? When a stock market crash happens, the market starts to give us some warning signs. The market starts to give us some signs in the market of what is going on and all that sort of stuff in the markets. So remember, guys, a crash, 2008 was 2008, but that was the entire year. And if you look back throughout, just even my chart through here, the market starts to give you some warning signs that we are starting to go from a bull market to a bear market. Okay, the market will give us signs if we just start to look out for that. Makes sense? If we just start to look out for that, and if we just start to look out for what's actually going on in the market. Now, the thing is this, guys, okay, the thing is this, is that if you look at, say, this, for example, this chart here, if you're looking at this here, look, the market will always, once again, guys, the market will always give us some signs. It'll give us some, I'm not sure why that, something's going on in my chat box today. The market will give us some warning signs, okay? So if we look at this here, and we go from here to here, all right, and we bring this over from here to here, one thing that you want to be focusing on, right? One thing you want to focus on is look at this here in the markets. If we look at this, we have a higher low and a higher low and a higher low and a higher low, higher low, higher low, higher low, higher low, pretty much equal low, higher low that was a lower low. Then we had another higher low and a higher low and a higher low. So as you can see, right, the buyers are pretty much raising their prices through here. What? No snagger in the comment. So as we can see, right, we can see how the market has been raising their prices of the market rising up through here. Makes sense? So when that happens, okay, when that happens, what you want to be doing, okay, what you want to be doing is you want to be falling along with the market, okay? Now look at this here. Look at this here. We had a high, then we had what? We had a clear lower low from this here, and then we started creating what? Lower highs, and lower highs, and the market broke down. So if we are at some sort of a top here in the markets, the market will start to give us signs. It won't just do this and then just go straight down like this here, okay? It just won't happen in the markets. It just won't happen there. So guys, and this is just the facts of how the markets work, okay? If you go back to 2008, people say this is different. So like, no, every single market crash that happens, you'll notice that this is how the markets work, right? Let me go to say a 7-day here. And let's just go back to 2008. You know, let's go to a 6-day. Right, let's go back to 2008 here. So the thing is this, guys, okay? The thing is, look at this here. This is 2008, and I need to get more data here. So anyway, if we have a look here at 2000 and let's go 7-day. Can I go back anymore? Oh, there we go. Cool. All right. So as you can see here, right, that the market started in 2008. We really started to. Now this is a bit more than a weekly chart, right? But the thing is this, guys, right? The market will start to give us some signs that the market is likely to pull back here. Now I had to go back to a 7-day. This is every 7 days, every week or so in the market to share this with you. Now I could probably I can bring up my other software a bit later on. Well, actually, no, I won't bring it up because it'll take too long to do that. But we have a low, and then we have a higher low, and then we have a lower low. Now we had, look at this here, right? The market starts to. The market will give you what? The market will give you warning signs that we're now going into a downtrend. We can never pick tops and bottoms because we never know exactly what's going on. And when I say flow with the market, I simply mean low, higher low. Oh, look, we have a higher low and then we have a higher high. What is this here? This is a lower high and lower low and a lower high. And then the market started to come down through to here. Right. So as you can see, right, like what I mean by flow with the market is as this was happening through here, guys, as this was happening through here and through here, and then the market started going sideways and then down a bit. Guess what? Or as this was happening through here, you be go, oh, the overall picture is changing. Remember, guys, this is 2008 through here, guys. Right. And yes, we did get a nice drop down through here, but what was the precursor? A lower high, breaking of the previous lows, and then we got a nice sharp drop down. Right? So if we are ever going to get a 1987 or a 1937 or a 1929, we're going to get what? We're going to get a lower high, breaking of the previous lows, and then down we go. Okay, that's what we're going to get in the market. It's not going to be anything else. We're going to get that, and when we break the previous lows, that's when we're likely to start seeing a nice, strong downward movement in the markets. And let me share with you. Let me go to the Dow Jones here. I'm going to go to the weekly chart. Let's see if I go to the daily chart. Let's see how far this goes back. All right, let me go to a 2-day chart because I want to share this with you. All right, the market will start, as I said before, the market will start to give us some warning signs. Here we go. All right, let's go back to, again, guys, this is just the facts. So people are saying the top's in the market and all this sort of stuff, and the market's going to crash and all this sort of stuff is total ludicrous because they don't understand how the markets work and what to focus on. Right? So as we can see here, right, what are we seeing through here? We have this bit through here, and I'm going to take a snag it through here, and I'm just going to walk you through this. Now, this is a 2-day chart. means every single day represents 2 days. The reason why is because I had to go back more in data, I'm back more in time. But look at this here, right? This, look at this here, right? So please, guys, this is where I'm saying don't trade based on what you think is going to happen. Look at this here. What do we have? We had a high. This is the Dow Jones high, lower high, breaking up the previous lows, and then we got the sharp drop down. See that through there? Then the market came back up, created a high, a lower high, breaking up the previous lows, and then we got a nice move down. Then the market created a low, a high, a higher low, a higher high, a higher low, and then we started to create what? The upward movement. So for you guys that are saying right now the bulls are not in control and the bears are not in control, right? There is no bullish or bearish in the markets right now. So, so that's what we're looking at through there. You know what I mean? And that's what's actually going on right now with the markets here, right? We have a high, a lower high, and then the market breaking down. That's what the market will start to do. Okay. And if we are going to get some sort of a 1987, we're going to get let's actually do this here, or 1987. People saying this is 1929 stock market crash. Let's have a look. Let's see if I can bring up an actual chart here. Image. I want to go back to the actual chart. Right, so you'll see this here, right? You'll see this. Let me go. All right, here we go, guys. All right, so here is the 1929 stock. People say this might be the 19. People say this might be the 1929 here, right? So what is this here? I've just brought up a snagget here. And look at this here. What is this? This is 1929. So people say this is like 1929. And definitely not like what happened in 1929? We had a low. Oh, geez. Let me see if I can make a different color. We had a low, then we had a higher low, we had a high, then we had a lower low and a lower high, breaking of what? The previous low. So who's in control right here? Sellers, because a lower high and lower low, breaking previous lows. And then we got the what? Say it with me, the nice move down. Right? So it was at this point here that if we're going to get any big move down or any sharp down, that's when it's going to happen after it created. That doesn't have to be a lower low first. It could just be a lower high breaking of the previous lows. People say, oh, John, but this is like 1937. All right, let me bring up the 1937 chart here. Where is the 1937 chart? Where are we here? Trying to get this through. I'm looking on Google here right now, guys. By the way, guys, I'm trying to get some data here. All right, is this 1937? 36, 37. Yes, it is. All right, cool. All righty, so let me bring. Where are we through here? Just trying to find a nice, good chart that represents exactly what I'm talking about. All right, so with the, just trying to find a good chart here. Oh, it doesn't really matter. I'll just use this chart here. Like it doesn't really matter what any chart will do, right? So as we can see here, right, this is the 1937 chart. All right. So we had a nice higher low, and a higher low through here. We had what? We had a high, then we had a lower low, then we had a lower high, and we did start to see a move down, didn't we? But when did we start to see a move down through here? This is 1937. When we started breaking what? The previous lows, that's when we started seeing a nice move down, right? Now, as you can see, right, this lower low in place was what? The warning sign to say that we are changing trend. We are changing momentum. We're changing tune in the markets. So if you guys are thinking that we're going to see a crash right now and it's going to happen today, and I'm predicting, and I'm going to predict the top and all this sort of stuff, you may be right. You may be right. And yes, this is in 1937 we did get a nice sharp rally up, and then we got and then and then we got a sharp rally down. But this is nothing. This pattern here is nothing like the 1937. Sorry, the chart that we're seeing right now is like the 1937. What happened right now is we got a big drop down, we got a big drop and a big rally back up again, like big V bottom. There wasn't a big V bottom through here. So that's what we're probably going to see, guys. In the markets there, that's what we're going to see in the markets there. We're not going to, and so we need to follow along with what the market is telling us. And right now, guys, we're not getting that, right? We're not getting a lower low, lower high type thing. We're actually getting some sort of a equal high up here. And so until this market, all right, until this market starts to, until this market starts to create some sort of a downward movement, we're not going to see a big crash in the market, guys. It's just not going to happen. The markets don't work like that. Go back in any crash in history. I just gave you the two biggest ones, 1929 and 1937. And I just shared with you, this is what happens. Now, you can never predict the top, but if we start to see we're going to see a nice move down, well, guess what? That's it there. Let me go to the 1987 crash. All right, let's bring up the 87 stock market crash. It doesn't matter what chart it is, right? They're all the exact same thing. All right. So, all right, so let's just use this chart here, all right? So this one here, I need a bit more of a data through here. All right, 1, 2, 3, 4, doesn't matter. Just trying to find a good chart that represents exactly what an actual daily chart, not a weekly chart. It's probably this one here. All right, so I'm going to be this one here. This is the 1987 chart here, right? It's 1987. What is this? The 1987, this is what? This is we had a low, we had a high, we had an equal low, we had a lower low, and then guess what? Then we broke down through here. Notice we broke down through there, 1987. Who's in control? Oh, lower high, breaking of previous lows. This is sellers in control. The sellers in control, and then we had the big move down. So, guys, if you're thinking we're going to get a big spike down right now on the tops of the market, like it's very indecisive right now. It's not bullish or bearish. It's actually more bullish right now because we've had much more stronger buyers than anything else. You know what I mean? And so that's what we're looking at through there, guys. That's what we're trying to focus on here in the markets. And so please, guys, please, if you're trying to predict the next stock market crash is going to happen, the charts start to give you some warning signs first. And what is it? It's as simple as it is. It's a lower low or a lower high breaking of the previous low. And then because of that, guess who's in control? The sellers are in control. Lower high, break of the previous low, right? So we either have a lower high and then a lower low and then the break in the previous low, sellers in control. Or we have a higher low, lower high, breaking of the previous lows. Makes sense? So this here is breaking of the previous lows, breaking of the previous lows. So I wanted to do this session today for you guys before I continue on with my day because I have so many people saying to me, stock market crash, stock market crash, stock market crash. It's going to crash, it's going to crash. This is like 1987, blah, blah, blah. The market will tell us. That's why I say to you guys, always listen to the market. The market's going to tell us. And if we're going to see a severe drop down, we're going to get something like this, a lower high breaking of the previous lows. A lower high break of the previous lows. A lower high breaking of the previous lows. A lower low, lower high breaking of the previous lows. All right, guys. So it's so important that you understand that, and then that's what you basically do with that there. And so guys, and this is where so many people get this wrong here. Okay. This is where so many people get this wrong here. Oh, by the way, guys, I'm trying to give you guys the link here. If you guys want to get access to that 1 day sale, I'm gonna update. Mindset sale. I'm gonna update the description here, guys. Alrighty, so I'm trying to get back to, there we go here. All right, cool. So that's basically what, and I tell you what, guys, that this is where so many people just get this wrong. They really get this wrong. Let me actually go through, the questions here now. Why not snag it? Could this be the beginning of the epic crash that Bo Polly has been squirting about for the last 6 months? You mean for the last 10 years? Maybe 4 or 5 years. What's your special strategy? Haha. The evidence from other YouTubers have found that investors are pulling out of the markets at a record pace, but the government is supporting the market. Okay, Doug, see all that stuff you're talking about there? The government, investors doing this, investors doing that, blah, 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 blah. All that sort of stuff you have no control over, right? That's not the thing that's going to predict you. Doug, I hope you can see, my man. If you haven't watched this whole session, watch it over again when I finish this, because I've walked you through the facts of how the markets work and what you need to focus on in order to say, okay, are we going to see a big leg down? Just like the Dow Jones. What did we get on the Dow Jones first? We got what? We had a lower high, a breaking of the previous lows. And then what did we see? We saw a nice move down. It's the facts of how I know this is as simple as it can be, but if you're trying to fight the market right now, where we've had this big, strong move up and we've created some sort of a higher high, hang on a minute. Wrong in the markets, right? Wrong in the markets. So that's what you need to be focusing on. That's what you need to be doing there. And so Doug, please, man, please. That's what I'm saying. The simple analysis of the markets doesn't mean that's going to, just because we get a lower high, lower low, breaking the previous lows, that we're going to get a crash. No, I'm not saying that. But if we do get a lower high, lower low, breaking the previous lows, who's in control? The sellers. So don't fight the market. That's when I say don't fight the market, that means don't fight the market. Right now, we've got a higher high. We could easily now create a high low, and the buyers are definitely in control. Who's in control? Buyers. Don't fight the market. See what I'm saying there, guys? Now, sometimes buyers in control, sellers in control, no one in control. So again, don't fight the market. I do find it strange that the market has continued to stay strong in spite of all the negativity worldwide, but your point have to go with your charts. Well, H1398, the facts are the facts, because tell me any, and I just walked through 2008, 1937, 1929, 1987, and the charts gave us some warning signs to say we should not be long this market right now. Why? Because it's creating a lower low, lower high, breaking of the previous lows. Or like 1987, it was a lower high, breaking of the previous lows, and then we've got to sort down. That's the sort of formation we'll get in the market, guys, before the market comes down. So many people are saying, well, the economic data is really bad, so this is what's going to happen. It doesn't matter all that crap out there. The most important thing that matters is what? The chart itself. The chart itself. The chart itself. And when you start to just focus on what matters the most, all that Donald Trump economic data, blah, 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 is not going to help you whatsoever, because that data that comes out now may not actually be an effect on the market until maybe 6 months down the track, until we get more and more bad economic data. Like, we just never know, right? But again, just look at the facts for what I'm saying here, guys. The facts are what? The facts are that the market gives you warning signs if we're going to see a deep selling move, just like we saw in what? just like we saw at the end of last year, the start of this year. Oh, sorry, the end of last year, the start of this year, just like we saw with that. So whenever we are trading, guys, that's why I say never trade based on what you think, hope, or fear. What I'm talking about, what we see. We're seeing this, and what the markets are telling us is the truth. We're not smarter than the markets. The market, the chart, is a simple representation of the truth in the markets. And if you're basing your analysis on what you think, hope, or fear based on economic data and based on Donald Trump and all this sort of crap, the charts are always giving us some guidance here, guys. And the better we can read the chart, the better trader you'll be. And that's where guys like, especially in my Master Trader Lab, which you can grab a free trial to, I also touch on some stuff with the actual trading course as well too. Some simple things to actually help you read the actual chart itself. So let's go through here. A float. How much should that go? How much should that play into to my trading strategy? Surely we can't be 100% about the charts and data only. Doug, the question you have to ask yourself is, you can't trade economic data. Listen to yourself here, okay? Listen to this. Trading is generally a shorter term thing. Economic data is a long-term thing. It's a bigger picture thing. So if you're doing your analysis based on bigger picture, but you're trading the markets, you're in and out with a couple of days, maybe a couple of weeks, the only thing you can rely on is the charts. And I'm telling you right now, Doug, my trading has been so successful because I only trade based on the charts. I take it one step further. I only trade based on my trading setup. So I trade what I see, but I trade the trading setup that I see here, not just because what the charts are doing here. Bing, bing, bong, 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 market crashes. Thanks for sharing your knowledge. No problem. I would like to hear your discussion why you think the market has basically ignored all the bad data. Well, Professor 582, it's not what I think, it's what the market is telling us right now. And again, if you guys have watched my session today, I've given you the facts of what the market is. And every single crash in history has given us some warning signs that, hang on a minute, the buyers are no longer holding this up here. And then bam, came down. And right now, what are we getting? We're getting clear higher high. Tell me one time in history where the market created a big V bottom shape and then created a higher high that then led to a stock market crash. It hasn't happened. So this is not like 1937 and that sort of stuff. It's, Professor, it's not what I think. It's just me. At the end of the day, it's just me respecting the market. That's what it's all about. Respecting what the market is telling me and just learning how to read this. Last Friday, there was a strong recovery in the close. I wouldn't really, Bernard, I wouldn't really focus on one day. See what I'm talking about here, the bigger picture. So we should be looking for the charts to make a lower high or vice versa. Professor 582, I'll take that one step further with you. You should be having some sort of a trading plan, trading setup, and that's when you trade. Just because we get a lower high, lower low break at the previous lows. Now, yes, if you're doing that, you're trading with the trend, you're trading with who's in control of the markets. That's a thumbs up for you if you're doing that, right? People trying to short the market right now, and it's like the market's not giving us any clear sign in a downward trend. So yes, thumbs up for that. But no, because what? Because you should be only trading based on a chart pattern. It could be anything. It could be a flag formation, guys. It could be a panic. It could be a false breakout strategy. It could be anything. Just pick something that you're going to stick to continuously. Because if you want continuous profits from the markets, you got to if you want consistency from your profits, you've got to be consistent at trading one strategy. So it doesn't matter what you do there, guys. Put a 10 and 20 day EMA on the chart low. That doesn't mean anything. What will silver do on Monday? What will silver do on Monday Tell me. If I could tell you that, I wouldn't be telling you anything. I don't know what's going to happen on Monday. You tell me, media. Do you like the 2-day over the 1-day or 3-day? Oh no, I'm looking at 2 days here, aren't I? Let's go back to daily chart. No, not really. How about crypto? Again, follow the markets. Looks like an inverted head and shoulder on the GDX. Good. That inverted head and shoulder looks like it's been there for quite some time. Can we take a look at the GDX and the? Can we take a look at the GDX and the GDX? Sure, we can take a look at the GDX and the GDX. GDX right now is actually holding strong. So very, 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 very strong right now. We've actually broken out of this level through here, came back down, found support, and now we're rallying back out of this level through here. So that's basically what the GDX is doing. It's actually looking pretty strong right now because we're broken above this support level now. We're holding this level and we're breaking back up. So it's looking quite strong. Looking quite strong. If we hold it and break above 25, then I have my next target would be up here of that resistance level there. And once that happens, then it's all over from there. So at the end of the day, guys, this session today was purely based on sharing with you, trade what you see, not what you think, hope, or fear. Economic data, jobs report, Donald Trump, blah, 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 Ray Dalio or a JP Morgan or all this sort of stuff out there, guess what? Is not going to give you the guidance. What I just shared with you today, right? What I just shared with you today is the thing that's going to give you the guidance. And the better you can read the chart, which just simply means exactly what I was focusing on today, the better you can do that, the better trader you'll be. And so, guys, that's all I want you to focus on, okay? Is just get really good at reading the charts. And what I mean by reading the charts, it's not about one day or one candle. See what I'm talking about here? It's about the overall flow of the market. So what's happening right now? Forget what we think, hope, or fear. We're creating what? The market is now creating a higher high. Is that sellers in control? Is that a lower high breaking of the previous lows? No. So therefore, bum. You know what I mean, guys? And so this is where we have to really, really, really get out of our own way and trying to be stop the market, because this is a higher high. This is a higher low. We could be creating some sort of higher low here soon, and then the buyers take it right back up to new highs. So that's what you want to be focusing on. That's what you focus on. Now we need, and as the market unfolds, as the market starts to give us these peaks and troughs, highs and lows, as we call them, that's telling us a story on what's going on. And that's us trading what we see, not what we think, hope, or fear. Jobs report is down, so a greater chance for the Dow to drop. Not really, not necessarily, because sometimes you get a really, really bad economic data and the market goes up. It's like, what? So that's what I want to be focusing on today, guys. And that's where I wanted to help you guys out with that, and just to help you focus on the most important things in the market. So, all right, guys, that's it for me today. Have a great day, and I will catch you guys next time. See you guys.